A stock which saw a large block yesterday is Happiest Minds. Promoter Ashok Soota sold a large chunk of his share. There might be more, but it's great to get in a sense of what the business now might be looking like any which ways with the MD and CFO of the company, Mr. Venkatraman Narayanan. Venkat, great having you. Thanks for taking the time out. It's been a while, and thanks for being patient with us while we were talking to another company. Just trying to understand, is this, do you have a sense of what the promoter intention might be, and then we'll get to the business as well? Is this the last of the stake sales, or could there be more? Any idea?
Okay. Let me give you a background to the whole thing. When we talked about Vision 2031, we said that there is a vision statement of building a company to be there in perpetuity. For that, you need a stable promoter holding. And that percentage that we had visualized, Ashok had visualized, was about 40%. And we had also said that he has, during his time, he wants to make sure that a large part of his wealth goes towards building of a legacy in a not-for-profit organization called SCAM. And he's also trying to set up something in the healthcare field called Happiest Health. So these two are his personal ventures. One is not-for-profit, and to which he has committed quite a large amount of money, along with a lot of other contributions he has committed to institutions. So the way to contribute to that was to pare down a percentage of his holding in the company. And it was supposed to be, whatever done, his idea is to make sure that it stays at 40%. So he was at about 50.4%. He has pared it down by 6%, and now it's near about 44+% in the company, Neeraj. So he's doing it to contribute towards SCAM and also to help build Happiest Health, both in the field of healthcare.
Got it.
Which is very...
Yeah. So Venkat, sorry. So just to round this off, because you're saying that, so maybe another 4% comes in at some point of time between now and 2031, right? That's what the point seems to be.
Yeah, as part of any transaction of this sort,
sure.
he gives out a lock-in saying he wouldn't sell for a period of time. But yes, but you should also be mindful of the fact that we may also raise capital that will also dilute him. So, but the puts and takes, yes, you are about right.
Okay. Venkat, good to get that clarity, and thanks for that. Now, coming to business as well, because a large block typically brings down the valuations of a business a little bit. So people who want to buy into your stock must be happy. Just tell us what the business is looking like currently, because a lot has changed between 2 quarters ago and now, with Accenture talking about generative AI bookings looking strong for them, but that's a different beast. How do you see the landscape in India and for Happiest Minds individually?
So last year, I'll start with our performance last year. FY24, we did about 11.3% growth in revenue terms. So if you look at it in comparison to most of the big people or comparator companies, we have been really top of the pack. There is maybe we are 1 or 2 when you compare us with those companies. So which shows the strong organic growth muscle that we have and how we have been building even during these tough times. Coming into FY25, we have consummated 2 deals. One is Pure Software and the other is Aureus Technologies. Based on that and the strong organic growth that we are seeing from the 3 business units that we have, which I'll talk about in a minute or so, we have given you an estimated growth of between 35 to 40%. Because, when you talk about revenue growth, you have to see from consolidation how much I get, whether it is 11 months or 10.5 months, or whatever that is. That's something that is up for discussion right now. But that, along with our organic growth, we are estimating between 35 to 40%, while retaining our margin at about between 20 to 22%. Because, when you acquire a certain large company, there are certain unknowns, and I'm factoring for that and the cost of acquisition. So if you really look at it, that puts us back on track to the $1 billion revenue dream or aspiration that we have set out for ourselves by 2031. It takes our growth. We need about 22% CAGR to reach the $1 billion revenue line. And this year with about 11%, we are slightly behind. But this year, FY25, we should, goes back to a 30% plus number, making up for maybe last year, which was FY24 for most of the people. Now, coming to the business part, yes, we are seeing decent traction in our new BU of generative AI, GBS, as we call it. We are also seeing quite a few conversations happening out of our 250 customers. I'm sure 200 plus customers who we have touched base with are talking with us about how we can help them with generative AI. So those discussions are ongoing. Our team size was about 77. It's slowly building up to close to 100 people right now. So that's something that is the focused generative AI people. Then we've got the normal AI, analytics and AI. All of that are sitting in the COEs, those capabilities. Those people, Happiest Minds, are sitting in the COEs. Put together, we are a decent sized strength in generative AI and the wraparound business. Starting quarter 1, quarter 2, we'll start reporting those numbers as well. And it'll be open to public view as well as to what we are doing in our generative AI. But suffice to say, close to 50 to 70 case studies or even more. We have got about 22 revenue earning projects. That's also the number of signups are going up at a very quick pace. There are standalone generative AI projects. There are sales into our existing customers and projects. So quite a bit of activity happening. That's on the new business. But if you look
right,
at it,
Mr. Narayanan, let's talk about Gen-A.I in a little more detail, and then we'll quickly move on to the rest of the business in the US and, of course, the markets that are going to be significant going into the next few years. You talked about how you're clearly one of the leaders in the space because you're ahead of the curve with a number of clients, like you've talked about, where you're working and doing projects on Gen-A.I. Give me a sense of how much can we expect over between now and, say, FY26 for Gen-A.I to contribute to your top line, and are the margins much healthier here? Because this is a business that a lot of tech companies are still trying to get their head around in some ways.
see, I don't want to give a number right now, but just say that if you call out a business as a BU, it has to be close to 5 to 10% in a given period of time, because we are today 200 million. IMSS is about 20% of our business, 80% is PDES. So, if you have to make a reasonable contribution to the entire business size, it has to grow to 10% within a credible period of time. So that's where I would like to leave the revenue growth at. Second is with respect to rates and profitability. We are working with existing customers, so obviously we have existing agreed rate cards. We are tweaking those for the kind of capabilities and competencies we bring in on generative AI. So in terms of margin, I would like to say it's not margin dilutive or price dilutive right now. With respect to new projects with new customers, again, it's at market-led prices. Our pricing has never been cost plus; it has been always market determined. So to that extent, that's given us a leg up. And like we have been saying right from IPO, that's about 3 years back, we have had a premium to the Indian market in terms of pricing. We are maintaining that. So that should address it.
Right. So Narayanan, how is business looking most importantly? We get so much of mixed commentary coming in, but you're at the realm of it, and the action is clearly focused around the US largely. Are we seeing a pickup in deals? Because from what we understand, not too much can be expected that elections are behind us in the US. Do you feel the same conversations moving to closure yet?
So here I would like to give you, a larger statement. One is, you can't keep away from investment in technologies for more than maybe a year and a half, 18 months or 19 months max. After which, because in the current day, businesses are run by technology. It's no longer a staff function or a good to have. So I'm sure everybody accepts that. And if it's so integral and core to your business, you can't stay away from new investments into that for more than 18 months. If you look at it, people talk about recession in the US and then talking about elections, rate cuts, a lot of reasons as to why they have stayed away from new investments over the last couple of quarters or even 4 or 5 quarters. But things seem to be changing there, and the need to again reinvest in technology and be on the cutting edge is something which is going to be an imperative. Just like generative AI, lots of investment is going. It's all new investments. So to that extent, we are all expecting that investment to come back. And just like post-COVID, there was a rush for technology. It may not be to that extent, but you will still see a lot of money and investment coming into the market and into new technology. But despite all of that, a tough year, we have grown about 11.5% last year, and we are trying to continue to build on that, base and push ourselves in. One final point is, we have about 70% of our business coming in from US, 68, 70%. But India is a very large market for us. It's disproportionate to our size, to about 18 to 19%. And we are seeing amazing amount of traction and business build happening in this market, whereas Europe is kind of stable right now.
All right. Thank you so much, Venkatraman Narayanan, for speaking with us. That outlook is interesting.